Hi guys, this is CA Balakrishna. Uh, Coming to the last standard of 200 series, essay 299, joint audit of financial statements. Still we are left with essay 220 that we'll discuss later on. Okay, by completing this standard, we will be finishing essay 200 series. Okay, let us quickly revise the standard. Basically, essay 299 deals with joint audit of financial statements. Now, first of all, with an example, let us understand what is meant by a joint audit. Let's say there is a company A Limited. Now, for this A Limited, two or more auditors are appointed. Okay, let's say B and Co, C and Co. Okay, these two auditors are appointed to conduct audit of A Limited. Now, these two auditors will be known as joint auditors, and this audit will be known as joint audit. Okay, basically this is a joint audit. Now, let's say there is A Limited. Now, for A Limited, there is a branch. Okay, now to conduct audit of A Limited, B and Co has been appointed as auditors, and at the same time, to conduct audit of its branch, C and Co are appointed as auditors. Now, whether B and C together can be called as joint auditors, the answer is no. Okay, for B and Co, C and Co is other auditor. Okay, and for C and Co, B and Co is other auditor. Thereby, we cannot call these two people as joint auditors. Okay, basically the concept relating to other auditors will be covered under SA 600. Okay, this is the difference between joint auditor and other auditor. Now, after understanding this, let us enter into the standard. First of all, basically this standard will deal with three aspects. First one, development of joint audit plan. Okay, since two or more auditors are appointed to the entity, the audit plan has to be developed by all these auditors together. Okay, all these auditors cannot develop their own audit plan. Okay, all these joint auditors should discuss among themselves and should develop a single audit plan, because if each auditor develops their own audit plan and the auditor doesn't communicate his plan to other auditor, then let's say here B and Co develops their own audit plan and C and Co develop their own audit plan. Okay, now B and Co doesn't communicate their audit plan to C and Co, C and Co doesn't communicate their audit plan to B and Co. In this case, what happens is B and Co audits entire entity and C and Co also audits entire entity. In this case, what is the use of appointing joint auditors? Thereby, at the planning stage, they have to discuss together, okay, among themselves, and should develop a joint audit plan. Okay, in this joint audit plan, they can segregate the duties among themselves. Okay, thereby in the joint audit, only single audit plan will be developed by all the auditors together. Okay, they cannot have their own audit plan separately. Next aspect we will be dealing with is responsibility of joint auditors. Okay, what is the responsibility of joint auditors, that we'll discuss. And finally, reporting by joint auditors, reporting aspect. Okay, these three aspects we'll be discussing in this standard. First of all, developing joint audit plan. Okay, to develop the joint audit plan, engagement partner and key members from each joint auditors. Okay, here we are having two joint auditors. Now, engagement partner from B and Co and engagement partner from C and Co, and also key members from B and Co, engagement team of B and Co, and key members from engagement team of C and Co will come together and they'll discuss. Okay, and they'll jointly establish overall strategy and develop a joint audit plan. Okay, they'll arrive at a joint audit plan. Now, while developing this joint audit plan, what are the aspects to be considered and what has to be included in this joint audit plan? First of all, in this joint audit plan, they have to divide the work among themselves. Okay, how the work can be divided? First of all, division of work based on identifiable units. Let's say this A Limited is having 4 units. Okay, unit 1, unit 2, unit 3, unit 4. Okay, each unit manufactures, let's say, separate product, or they manufacture same product. Basically there are 4 units. Now they can decide that B and Co will audit 2 units and C and Co will audit 2 units. Okay, like this they can divide the work among themselves. Now let's say if there are no such identifiable units, okay, in that case auditors can divide the work among themselves, like B and Co will audit assets of A Limited and C and Co will audit liabilities of A Limited, or B and Co will audit incomes of A Limited and C and Co will audit expenditures of A Limited. Like this they can divide the work if there are no identifiable units. Hope this is clear. Okay, or based on assets or liabilities, income and expenditure. And there will be some important areas in the entity, okay, which are prone to high risk of material misstatement. Those high risk of material misstatements can be audited by all the joint auditors. Okay, the joint auditors can come to a conclusion that these areas in the entity are prone to high risk of material misstatement, thereby both of us will audit these areas. Okay, they can arrive at such conclusion in respect of those important areas. Hope this is clear. This is how the audit work can be divided among the joint auditors in respect of a joint audit. Next, while preparing the joint audit plan, they have to consider the risk of material misstatement. Okay, based on risk of material misstatement, they will design the audit plan. They should also consider professional judgment and result of preliminary engagement activities. Okay, considering all these factors, they have to decide a audit plan, or they have to develop a audit plan. And in this audit plan, they should ascertain reporting objectives. Okay, what is the reporting objectives of this joint audit? They have to ascertain it and obtain common engagement letter. See, since the entity has appointed joint auditors, okay, 2 or more auditors together, it would be fair enough to give only one engagement letter, okay, one joint engagement letter to the entity. Thereby the auditors, the joint auditors, need not give separate engagement letter. Okay, these both joint auditors, B and Co and C and Co, together can give single engagement letter to the entity. Hope this is clear. That is regarding developing a joint audit plan. Next, coming to the responsibility of joint auditors. Basically, joint auditors will be responsible individually. Okay, they will be separately responsible in respect of the work that has been allocated to such a joint auditor. Okay, in this case we have, let's say we have allotted audit of assets to B and Co, and or they have decided that B and Co will audit the assets and C and Co will audit the liabilities. Okay, who have decided? Joint auditors themselves will decide whom to audit what. Okay, now this B and Co will be responsible in respect of assets only, because audit of assets has been allocated to B and Co, and C and Co will be responsible in respect of liabilities only, because audit of liabilities has been allocated to C and Co. Okay, coming to joint responsibility. Here you can write it, joint responsibility. In respect of which matters the joint auditors will be jointly responsible. First of all, in the respect of work that is not allocated to the joint auditors, obviously in respect of work that is not allocated to the joint auditors, all the joint auditors will audit those aspects. Thereby all the joint auditors together will be responsible in respect of such areas which are not allocated to any particular auditor. Hope this is clear. Next, decision with respect to nature, timing, extent of audit procedure in common audit areas. Okay, the auditors at the time of developing a joint audit plan, they will decide the areas which will be commonly audited by all the auditors. Okay, in respect of those areas, decisions relating to nature, timing, extent of audit procedures will be taken by all the joint auditors together. Thereby, in respect of those decisions, since all of them together have taken the decisions, all of them together will be responsible for those decisions. Hope this is clear. Next, matters brought to the notice of joint auditors by other joint auditor. Let's say B and Co is auditing assets of the company. Okay, while auditing assets of the company, B and Co felt that there is one particular asset in respect of which I need to consult the other auditor, the joint auditor, that is C and Co. Okay, I need to discuss this matter with the C and Co, and I have to come to a conclusion. Okay, we both have to together come to a conclusion. Like this, one of the auditor B and Co thinks, and he communicates. Okay, he takes this matter for discussion with C and Co, the joint auditor. Now, in respect of this matter, these both joint auditors discusses together and they comes to a conclusion together. Okay, in respect of those matters which are brought to the notice of other auditor for discussion by one of the auditor, all the auditors will be responsible jointly together in respect of these matters which are brought to the notice of other auditors. Hope this is clear. Okay, matters brought to notice of joint auditors by other joint auditor. In respect of these matters, all the joint auditors will be responsible together. Next, financial statements compliance with statutes. Yes, first of all, while preparing the financial statements, it is responsibility of all the joint auditors to see that these financial statements are prepared by the management in compliance with all the statutes. Okay, this responsibility cannot be assigned to only one particular auditor. Okay, it is a duty of all the auditors to check whether the financial statements are prepared as per compliance of various statutes and applicable financial reporting framework. Okay, this will be joint responsibility of all the auditors. Okay, the next point is that only presentation and disclosure of financial statements as per financial reporting framework. Okay, next, compliance of audit report as per relevant statutes and standards on auditing. Okay, while giving the audit report, all the joint auditors together will be responsible to check that this audit report is in compliance with all the applicable statutes and the standards on auditing. Hope this is clear. Next, that is relating to responsibility of joint auditors. Moving to the reporting part. Reporting. Now let's say there are two joint auditors, B and Co and C and Co. Okay, these two joint auditors have come to a common opinion. Let's say both of them are having adverse opinion. Okay, or both of them are having a qualified opinion. In this case, they can give a common report. Okay, they have to give common report. Okay, if they are having same opinion, okay, common opinion, then issue common report. Okay, now let's say they are not having common opinion. B and Co says adverse opinion, C and Co says qualified opinion. In this case, they have to give separate audit report as per their opinions. Okay, issue separate audit report. But while issuing separate audit report, let's say B and Co is having qualified opinion, C and Co is having adverse opinion. Thereby, they have given their separate audit reports. Okay, they have given two audit reports, one by B and Co, one by C and Co. Now, in the audit report that has been given by B and Co, he should mention that there is another joint auditor for this entity and he is having a different opinion. Thereby, he has given a different audit report. You please refer to that audit report also. Okay, like this he has to mention in the audit report of B and Co. In the same way, C and Co should also mention in its audit report stating that users, okay, users of the financial statements, that there is another auditor by name B and Co. Okay, he is having a different opinion on the entity's financial statements. Okay, thereby he has given a different audit report. You please refer to that audit report also. Okay, like this, reference to the audit report that has been given by another joint auditor has to be made in the audit report of the joint auditors. Hope this is clear. If they are giving different audit reports, if they are giving common audit report, then that's not necessary, because there will be only single audit report. Okay, in the first case there will be only single audit report, but here in the second case, since there is a disagreement among the joint auditors, they are giving separate audit reports, and they have to make reference of such audit reports in their audit report. Okay, next, another point is, let's say there are some 5 joint auditors. Now of these 5 joint auditors, one auditor is having a qualified opinion, and balance 4 auditors, 4 joint auditors are having a, let's say, adverse opinion. In this case, whether this one auditor who is having a qualified opinion should agree with these 4 auditors, or can he give a separate audit report with his qualified opinion? The answer is he can use separate audit report with his qualified opinion. Okay, these one auditor, one joint auditor will give his report, and these 4 auditors who are having a common opinion will give a single report together. Okay, thereby joint auditor not bound by views of other joint auditors. Hope this is clear. By this, revision of essay 299 is completed. Okay, in the next class we will be starting with revision of 300 series. Okay.